इतने कॉल्स, इतने सारे कॉन्ग्रेचुलेटरी मैसेजेस जो आए हैं, सो ऑब्वियसली ओवरवेलमिंग है।
मैं तो बस अपना पढ़ते गया एंड एग्जाम दे दिया तो आ गया।
रैंक 1 का सपना मैंने ऐसे नहीं देखा था, पर हाँ ये जरूर था जो भी देना है अपना बेस्ट देना है।
मैं कभी सोच के नहीं रखा था कि रैंक 2 आएगा मेरा।
मेरा मानना ये है कि सबसे ज़्यादा इम्पोर्टेंट होता है कि आप अपना बेस्ट वर्जन बनो।
एक प्रॉपर बैलेंस और एक प्रॉपर शेड्यूल, दैट इज द मोटो।
How old is accounting? What is accounting? And why does it exist? Clay tokens were used in Mesopotamia 7,000 years ago. Different types of tokens. These tokens were used for cows. These tokens for sheep. Why were they keeping? Of course, my friends, to keep account of the inventories. Everybody wanted to keep account. Accounting is really very, very old. The idea behind bookkeeping is you are recording. You are putting a mark against one cow, one mark. That is called bookkeeping. So if you want to keep a track of something, somewhere or the other, you need to systematically record it. You need to have an information. You need to know what you have. Then only you can come to a correct decision. So when we speak about accounting, quantitative, that is numbers, financial, that is money. Accounting has to be useful. It is practical. It is not theoretical. And how is this accounting useful, my friends? It becomes useful because of the decisions. A good decision can change your future. Accounting decisions are useful because we use the past in the present situation to construct a new future. This is what accounting is, my friends. Now let's discuss the flavors of accounting. Bookkeeping. Do not underestimate bookkeeping because it all begins from bookkeeping. Second flavor, financial accounting. This financial accounting, are we doing it for ourselves? We are basically doing it for outsiders. And who are those outsiders? The lenders of money or our investors. The third flavor is managerial accounting. Yes, this is about the daily decisions the managers take to run the show. And you know, these are absolutely secretive. Andar ki baat, andar ki khabar. You need an investor, my friend. Are you going to give your absolute secret to the investor? Definitely not. But that investor would require certain summary, certain reliable information through which that investor can decide, okay, it seems merit to put in my money on this company. When we give a summary statement, that is balance sheet, profit and loss statement, when we prepare a cash flow statement, managerial accounting is all about the daily decision making process. Imagine a situation, I'm a company who's manufacturing shirts and now I would like to venture into trousers. I'm a company manufacturing black shoes. Should I also start manufacturing brown shoes? With managerial accounting, reports for insiders, reports for managers who want to run the show on a day-to-day basis, who want to take advantage of the competition, managerial accounting serves as a tool, as a competitive tool to upset your competitors. So, are you ready to taste the fourth flavor? So, can we conclude? Bookkeeping means systematically recording the transactions as and when it is happening in a chronological order. It all starts with bookkeeping. Each and every transaction is recorded. Financial accounting means arranging the records of bookkeeping, preparing a profit and loss statement, preparing a balance sheet, preparing a cash flow statement, and yes, these are made in a systematic manner for outsiders. Managerial accounting for insiders. And yes, who the insiders are? The managers of the company, the directors, the BOD, that is Board of Directors. The fourth flavor was income taxes. Let's discuss bookkeeping, financial accounting, managerial accounting. We would not discuss income taxes. To understand bookkeeping, we are directors, we are movie directors. And imagine a situation, a virus from the outer space comes to Earth. And that powerful virus, the entire Earth is affected. What if all novels disappear? You can no longer read Tom Sawyer. You can no longer read Gone with the Wind. Because Gone with the Wind is gone with the wind. The virus from the outer space. And such a strong virus, it has the capacity to delete all the novels. You have no novels left. Not even in your iPad or even in your Kindle. Nowhere. Why not delete all the accounts book? Okay. Imagine all the accounts book deleted. Everything deleted. All the mathematics book deleted. CA question papers deleted. ISC, CBSE question papers deleted. We do not have any record. What will happen? Students would be happy. People who are interested to read, they are in a state of shock. Basically, it's a loss, cultural loss. But still you have money in your pocket. Still you can go to a bank, you can withdraw money, take your girlfriend out for lunch, buy good pair of jeans, trousers, goggles, sunglasses, Reebok shoes, have dinner at costly restaurants, buy Valentine's Day gift. So life is on. Let's change the scene now. Now that space virus coming from the outer space, coming to Earth, entering the space of Earth. And this time the virus is thinking to destroy all the records. And yes, it has done it. Your cell phone, there is no record. You cannot call anybody. You want to go to the bank. I want to withdraw 1 lakh rupees. The bank says, we do not have your name, sir. We have no records. It's your wedding time, your sherwani or your suit, wedding suit. You want to go to the tailor. And all the records from his computer is out. And even the slip which you had, the virus is so powerful, the slip, everything is erased. You know what will happen if all the records get erased? The human life will come to stand still. Societal grid lock. Can you understand the power of records? Such power is called bookkeeping, my friends. All the accounting, be it managerial, cost accounting, human resource accounting, social accounting, environmental accounting, it all starts from bookkeeping. We have understood the importance of information. Bookkeeping is all about collecting information and recording them, classifying them in a very proper manner. Walmart has 10 billion customer visits per year. Do you think this information is very important for Walmart's business? So recording this information is very important so that they can take better decisions. They can make proper managerial reports. These big companies, they are collecting information, my friends. Coca-Cola has estimated, and they are very proud of the fact that they are serving 650 billion servings per year. So Coca-Cola has collected the information. Coca-Cola can tell you which country, which state, which part, which time, which date, summers, winters, daytime, evening time. They have all the statistics with them. And let's come to Google. 1 to 2 trillion searches a year. 1000 billion makes 1 trillion. But if you want to do business with Google, you want to do business with Facebook, you want to post your advertisement in Facebook, with each click, and that click was from which geographical part of the country or the world, they will give you the information. If you want to post your advertisement to 18 to 25 years, let's say in Delhi, you can put the geographical area. In that locality, your advertisement would be there. Facebook will give you each and every detail so we can conclude what type of systematic bookkeeping these companies are following. They have all the information at their disposal. Are we actually aware how much kilos of potatoes we consume the entire year? Or if you had lovely matar ka parathas, how many kilos of matar you have consumed? Or how many chickens, anything. If you want to understand about your fooding habits, or if you want to take a particular decision, it all starts with proper systematic recording of transactions. Let's say you want to rework out the budget. You want to control the wastages. Once you have a complete record, you can make useful decision. So bookkeeping, we discussed about Google, we discussed about Facebook, we discussed about Coca-Cola, we discussed about Walmart. To understand bookkeeping, preservation of a systematic quantitative record of an activity. Now coming to financial accounting, my friends. To understand the concept of financial accounting, let me take you to a situation where you want to apply for a house loan. You want to get married and your girlfriend said, see, the place where you are living, my father is not going to marry me at the locality where you are living right now. You need to change your house. Since it's a love affair and you love us so much, and you know banks are there to give you loan, you go to a bank and you say, bank, please give me some loan. If you do not give me loan, I'll not be able to marry her. Will the bank manager sanction loan to you just because how pure your love is? No, my friend. Bank manager will say, oh good, yeah, you are in love, that's great, God bless you. But if you want to take a house loan, you need to do only two things. Please verify your income and also verify assets and obligations. I'm very sure you do not know about what assets is or what obligations are. To put it in a simple language, assets means what you have. Do you have your car? Do you have some cash? Do you have some investments? Do you have some jewelry? What belongs to you? What belongs to you is called asset. And what you need to pay to somebody else is obligation. So if you need to pay to somebody, it's an obligation. What belongs to you, what you are the owner, is your asset. So the bank is interested to give you the loan, but only condition is, please verify your income. Why does the bank want to verify your income? And bank has asked for personal financial statements. Personal financial statements. That is summary of income and assets and obligation. Assets and obligation means balance sheet, and summary of income means profit and loss statement. If you do not know much about profit and loss statement and balance sheet, just to put it simply, summary of income. How much money have you made this year by doing whatever you are doing? If you are a teacher or if you are an architect, if you are into business, whatever. What income have you generated this year? This is what the lender is much interested to know. And not only this year, what about the past year? What about 2 years ago? The lender wants to verify whether you are a person who is into earning money. Let's say if you're earning 50,000 rupees per month and the bank gives you a loan and the EMI is just 20,000 rupees per month. So bank is absolutely sure, yes, if I lend my money to this fellow, he can repay me back. So you need to give to the bank the summary of income and assets and obligation. Obligations can be obligation with some other lender. Maybe there is a motorcycle loan already existing and you have an EMI of 5,000 rupees for that motorcycle company, and you have an obligation of 5,000 rupees to the bank who gave you loan to purchase the motorcycle. So this particular bank who wants to give you the loan for the new home you want to purchase would like to see your strength in repaying, and also would like to know your obligations to other banks or any other person. Now, since we are studying this under financial accounting, and we all know financial accounting is your balance sheet, profit and loss statement, your cash flow statement. The point is, how does this financial statement benefit the lender? See, the lender can forecast the repayment capability and also the probability. The lender will work on your summary reports and the lender would decide, see, after our internal calculation, you wanted a loan of 20 lakh rupees. We can give you a maximum loan of 15 lakh rupees. And this loan we give you for 20 years, and this would be the EMI. The EMI would be 10,000 rupees. And as per your statements, we know that you are earning 50,000 rupees, but 5,000 rupees you are also giving EMI to your motorcycle company. So we have calculated everything, and yes, this is the maximum loan we can give you. This is the benefit to the lender. What is the benefit to the borrower? I am the borrower. What is the benefit? Imagine a situation. Even if I go and cry and catch the leg of the bank manager, please, I love her so much, I won't be able to marry her. The bank manager is not going to give me loan, my friend. I cannot go with a gun. You please give me a loan, otherwise I'll shoot myself. It will not help. My statements, the summary report, yes, see, I am not just a lover boy, but I am a person of great credit worthiness. I am working in a MNC. I am a chartered accountant, and my salary package is 10 lakh rupees per annum. This is my first salary package, don't worry. Next year I'm going to get promotion and it will be 15 lakh rupees per annum. If you give me the loan, you don't worry, I'll repay you. The benefits to the borrower is, it reduces the uncertainty. I know for sure, I can promise my girlfriend, darling, don't worry. We will definitely get the loan. And yes, the place where I'm staying, I will shift my residence because I love you and I want to marry you. This is the situation. The borrower is absolutely certain, and the lender of the money is also sure his money would come back to him. So we can conclude personal financial reports. The benefits to the borrower is, it reduces the lender's uncertainty and opportunity is given to reveal your credit worthiness. The father-in-law would be impressed. Oh, good. That means my future son-in-law is really good. So I can definitely give my daughter's hand in marriage. So my friends, I am sure now you know how important financial accounting is. Now we have Lily, and Lily wants to open her own ice cream company. For that, of course, she would require a big land. She needs to raise the factory building, of course, the machineries, lots of cream, strawberries. She's definitely going to make very tasty ice creams. But from where would Lily get the funds? Now, my friends, let me introduce you once again the power of balance sheet, the power of profit and loss statement, the power of cash flow statement. And what do we call all these three statements? Financial statements. With the power of financial statements, Lily can induce a stranger to invest in Lily's dream. Lily is going to make a dream come true with the power of the financial statement. Lily needs 100 million to make this happen. Lily will call her uncle. Uncle, I want to open an ice cream factory. Would you lend me some money? But 100 million is not easy. Neither our uncle, nor aunt, or brother, or sister, or family, I'm very sure they all would fall short of the amount. So, if you have a dream of doing a business, the first door you would knock is your family members, your friends. Yes, I have a plan, and yes, this plan will work. I have the profitability statement. I know the resources required to run this. But most of you would not have rich dads or rich uncle or rich relatives. So, whom would you go for money? The answer to this is strangers. Why would a stranger put in his hard earned money on your dreams? You convince the stranger with the financial statement, my friend. The financial statement is what they need. They would like to know the profitability, they would like to know the resources required. Then they would make a fair judgment. I think Lily's ice cream company dream has got a merit. I would like to put in my money there. Yes, Lily, I would like to put in my money in your dream because I'm very sure you are going to make a huge amount of profit. Lily needs 100 million to make this happen. From where can she get 100 million? How can Lily convince strangers to invest 100 million in her ice cream company? Lily is going to produce the financial statement, balance sheet. It is the list of resources. What do we mean by list of resources? List of resources are those list of items which we own. Do I own a car? Do I own a factory? Do I own a land? Do I own a motorcycle? How much cash I have? All these are my resources. These list of resources, in accounting terms, we call them assets. From where did these list of resources come to me? Was it my own, or did I borrow some money from outsiders to get the assets? If I borrowed some money for my resources, I am under an obligation to pay them. So whatever obligations, my friends, I have, I need to pay it. They call it liabilities. The recording of assets started way back in Mesopotamia. They were listing their assets. How many goats I have? How many sheep I have? So this is a very old practice. We all want to list our assets and they are called resources. And if we need to pay it to somebody, that's an obligation, liabilities. The second important statement, my friends, is the income statement. We all know what the balance sheet is. It's the resources and the obligation. Resources is equal to assets, obligations is equal to liabilities. Now coming to income statement. Income statement very clearly how much money does the business make. Every business is supposed to make some money. So how much money are you making? How much money did you make last year? What is your projection of the next year? If a future investor does not ask these questions, trust me, he will not be able to put in his hard-earned money. Now my question, my friends. The investor, imagine a situation when you want to be that investor. Would you be investing your money for the past of the business or for the future of the business? Of course. When you invest, you are buying that company. So you are actually buying the future of the company. And to take a decision about the future, which should seem bright to you, you would like to go deep down in the past. Let me check how much profit you made in 2010, 2011, 2012, 2013, 2014, 15, 16, 17. Yes, you can see the company is every year making profits and the profits are increasing every year at 25%. Since you have seen the past 7 years profitable statement, the company is making money, you can make the wise decision. Yes, Lily, I would like to put in the money. Yes, Lily, we would expand this company and we would open ice cream parlors all over the globe. much.